Let's talk shoes and footwear, shall we?
Let's do it.
Let's do it. Before COVID, 70% of the shoes sold in America were made in China. New Balance trying to change that. They're bulking up their U.S. manufacturing. And Joe Preston is the CEO of New Balance and joins us now. Joe, thanks for joining us this morning. We really appreciate it. Did you have any choice about this? Because it must be hard to get product out of Vietnam and China. You had no choice but to build in America?
Well, good morning, Stuart. New Balance has had a long-standing commitment to domestic manufacturing. We've been making product in the U.S. for years, and we are the only athletic manufacturer that produces here in the States. We have 5 factories in the States, 2 in Massachusetts, 3 in Maine. 1 we just opened up last week. It's a new facility. We added 90 new jobs. We're going to bring that up to over 200 by the end of the year. And for us, it's really been about a couple of things. First of all, it's about craftsmanship. Because we make product, we believe it helps our quality scores, and it's also about community. For our ownership, it's always been about community, about jobs, about American manufactured jobs.
Okay. Does it make economic sense? It was always, traditionally, it's been cheaper to produce shoes in Vietnam and China. What about the economic question here? Can you do it at the same price in America?
Well, obviously the industry is very competitive. There's always pressure for profits. So despite those pressure for profits, we've always maintained and have grown our domestic manufacturing footprint. But we also think it helps make us getting closer to the consumer so we can make changes to trends and that sort of thing. We're also buying the equipment, we're hiring associates, we're creating training, we're creating the processes so that when we do work with our contract manufacturers, we know we're good partners and can make a better product. Today, with the supply chain crisis that we're seeing out there, you're seeing inventory that is literally taking so much longer here to get into the U.S. That's obviously tying up cash. So clearly, I think other companies are seeing the need to onshore.
Is there any sign that this supply chain crisis will ease at all in the next, say, year?
I don't know about next year, but I can't see it for the next 6 months. I mean, still today it is difficult to get containers. It is difficult to get them into the ports. You know, the amount of ships that are waiting offshore, and once you get into the ports, just the shortage of truckers here in the U.S. does make for a challenging supply chain.
You're going to have a problem with inflation because your inputs must all be going up in price, and you're manufacturing in America, which probably has a higher labor cost. You're going to have to raise prices, aren't you?
Well, we have selectively raised prices. We've had to. You've seen wages here in the U.S., the inflationary pressures here, and the raw material prices are certainly impacting it. But it's not hurting our demand. Last year, we grew over 30%. It was up over double digits over 2019. We're a $4.4 billion company today, and we're seeing that momentum here into 2022.
Oh, that's interesting. You still have that momentum, very strong demand heading into this year.
We do. We just ended the first quarter, and we were constrained by supply. Quite frankly, we could have grown even more than we have, but we've had a really strong start to 2022.
Joe Preston, CEO of New Balance. We'll remember that name. Thanks for joining us, Joe. We do appreciate it, sir.
Thank you, Stuart.
You got it.